Welcome to another episode of Business by the Numbers. I'm your host, Hunt Emirates, CPA with Parmelis & Associates. So I've been doing a number of end-of-year webinars, questionnaires, stuff like that, and have been giving out some EIDL, ERTC updates, and all of the different acronyms that you can think of. With the end of year coming up and me doing this fresh on my mind, what better to talk about this week than some end-of-year updates, some news, some recent movements in interest rates, market updates, and everything else in between. Before we get into that, I just want to stop and say thank you to you and the rest of the dedicated listeners. This show wouldn't exist without you, and I do this show for my listeners. So thank you to all the comments, emails, questions. And if you have a question for me, shoot me an email at podcast@parmelis.com. Always happy to answer questions. Always happy to talk more about our services. So Hunt, we got a lot going on. Okay, we're going to do a market update. What the heck is that? What are we going to talk about this week? I got three big things to talk about to you. The BOI Report, or the Beneficial Ownership Information Report, ERTC updates, and lastly, interest rates. Something that is familiar topics we've talked about in the past, but all of this information is only as good as it is timely. But really, got some quick ones that I want to make sure that you guys are aware of to make sure that you guys can make changes, take note where applicable for you. The BOI Report. So you might have heard this a lot. FinCEN report, BOI report, Statement of Beneficial Ownership Information. So what this is it was a report that they came out. This was actually originally passed in 2019. So this law was old. The reason why it got delayed now, obviously COVID, it has been challenged in courts before. What they wanted you to do is in 2024, if you had an existing entity, you had to register with the FinCEN. It's called, the FinCEN is the department's called, Financial Services, I forget what it is. But essentially they're looking for white-collar criminals. So guys that are money laundering, guys that are doing illegal stuff, I don't know what it is. Anyways, what they wanted us to do is they wanted us to give them the information of all the entities out there around the country. So when you set up an LLC, you have to tell them if it's one member or if it's multiple members. And you also have to tell them, hey, give us a number or give us a member that we can contact. So if you set up an LLC that has 10 members, you really only told the state about one of them. You don't need to disclose it to anyone else officially. Now, when we do tax returns, the ownership gets reported on there, etc. What they wanted is they wanted to know who owns every single entity out there. Name, address, social security number, and a copy of the driver's license. It, from the start, seemed like a government overreach, but it's 2024, right? Government overreach is kind of the status quo right now, but this has been challenged, like I said, in the past. And when they announced that it would come out this year, it's been challenged 4 or 5 times already. So as it stands currently today, and I'm saying this on December 9th, 2024, it is currently dead in the water. So the program is still out there. You can still go on the website right now. If you have already done this, then you're fine. You're done. You don't need to do anything else. But as of right now, it got challenged in the Supreme Court, I believe, in Texas. And the program is still out there, but they have now stopped any sort of enforcement on this. So the government tried to get a temporary stay, which means that they lost the judgment, but they were trying to defer anything until the appeals come up. The government said that the case was so strong that they already made the injunction so that they can stop enforcement right now. Now, if the government wins the appeal, if they choose to appeal this, then this rule could still come back. So if you're going to keep an eye on the appeals process, or if you're going to see if the government even tries to appeal this, this is not completely dead forever. They could still choose to bring this back. But as of right now, it is dead in the water. If you are sitting here right now, what should you do? So if you're sitting right now, you're in one of two categories. Category 1 is you probably already did this. This report was due before the end of the year. It is now almost the end of the year, so I would imagine most of you guys have done this. If you have done this already and this has been overturned, this has been, challenged as unconstitutional, there's nothing you got to do. You already filed it, right? You don't have to do it again, but you're done. Now, if you're in the other group and you have not done anything yet, what would you do? Really, you got two different schools of thoughts. What they're doing, I agree. It's a government overreach. I think it's an invasion of privacy. But like I said, what is it nowadays? All of this information the government is asking from you, they already have. So if you don't like the idea, if you don't want to give them any more information than you had to, and you're done with the government, then fine, you're done. They can't enforce this right now. And if you choose to not do anything with it, then fine, I don't disagree with you. And more than likely, you're never going to have to do this again. Now, if you choose to not do it now, the government does go back next year and appeals this stuff. Remember that you're going to have to do this if and when that time comes. You're maybe in another school of thought saying, Hunt, I haven't done it. I just completely forgot to do it. I don't even want to think twice about this. Can I just go online and do this right now? You can. I'm going to put a link in here. I did a YouTube video to walk you through how to do this stuff. If we go down through here, I agree. So first page on here, everyone is going to be doing initial report for right now. Like I said, they can't enforce this right now. If you don't feel like doing it, you don't have to do it. If you already did it, you're done. If you want to do it, just be done with it. The process is really easy. The only thing that you need to have a copy of is your driver's license, like a picture on your phone that you can upload. It should only take you like 5 minutes. Name, address, and social security number is the only thing you're going to need to know, and then have a copy of your driver's license. That's the update on it. By the time you guys hear this, you might have already heard this on a webinar that I did for WorldPAC, but kind of funny, WorldPAC asked me to come on and do a webinar about end-of-year updates and the BOI report, which we're still going to do, but it's not as imperative right now to do it. Wrapping up the FinCEN beneficial ownership. If you've done it, great. If you haven't done it, you probably don't need to right now. So something that we definitely haven't talked about in a long time, because there was really no news to report, is interest rates. Interest rates right now, where do they stand? What's going on, et cetera, et cetera. So Hunt, why are you talking about this now? I'm talking about this now because everyone expects there to be another interest rate cuts at the end of December. Where it is right now is that we've done 2 rate cuts so far this year. The first one was done pretty early in September, I believe. October, they didn't cut the rates. They met in November and cut the rates again. And then the plan right now is that December, I believe it's the 18th is when they meet again, that there will be one more rate cut before the end of the year. Right now, they've cut it 25 basis points 2 times. So interest rates are now half a point lower than when we started this year. If they do the third one in December, it will be essentially 25 points additional. So they would be almost 1%, 0.75% cut this year. Are they going to do this? Or are they not going to do this? Timing on this episode probably stinks. There is a couple financial reports that are coming out like as of today, if you're listening to this, Wednesday, the 11th of December, and then Thursday, the 12th of December, some jobs reports coming out. I believe that the inflation numbers are coming out there. And what are we looking for here? I've kind of stopped doing as much updates on the interest rate stuff because I think we've kind of jumped the shark here. Good or bad reports in the job market? Well, let's talk about that real quick. If you want to see if the economy is doing well, you're looking to see if we're creating jobs, if generally prices are going up, demand is going up and stuff like that. But if you're looking for cutting interest rates, you don't want to see the economy that's too good. Because think about interest rates like a gas pedal for the economy. If you want to stimulate the economy and you want to push down a gas pedal, you cut rates, right? Make things cheaper for people. But what we've been seeing with inflation and prices getting too high is actually a too good of an economy. So what the government thought is the economy was going too fast and they wanted to take their foot off the gas by raising interest rates. Now, for about a 2-year period, we got rates about as high as they could be. So right now, we really only have 2 choices. Are we going to keep rates the same or are we going to start cutting them? What the indicators were looking for is they were looking for jobs to settle off, right? Like economy to start to cool down, job creation to start to slow down of saying, hey, you know what? Prices aren't going up because people aren't really spending as much. The economy's not growing. Now, what they have seen is there was a couple blips in the summertime where I think some people thought that it was good information, but it was probably just too little of information to gather any trends off of. But inevitably, they cut rates in September. Now, the reason that they didn't cut rates in October is because none of the financial reports coming out indicated they should keep on cutting. None of the reports coming out indicated they should have cut in September. So the reason why I said is we have a bunch of information coming out here this week. The same flip side, I said, I don't think it really matters that much. We have outside factors, right? The Treasury Secretary said this is not a political position. It is absolutely a political position, right? How can, the commissioner of the largest bank in the world, right, the federal bank in the United States, not be a political position? everything is political in today's point of view. They can't really fire the Treasury Secretary, but they do appoint this stuff. Come on, right? Look at the stuff that's turned politicals in today's day and age. You can tell me the Treasury Secretary is not. Now, we have a new president coming in, right? Trump will be in January. The Treasury Secretary now trying to fight for his job, trying to appease Donald Trump by cutting rates on this. I mean, there's a large argument that the first cut in September was very political to try and stimulate the economy before the election. You might agree or disagree with this. I find it interesting. I mean, this is the puppet strings of our economy. So if you're not paying attention to these reports, if you're not paying attention to the interest rates, you probably aren't following the financial markets that much. What I'd be expecting or what I would be forecasting if this was me as a business owner, as an American, I'm expecting rates to go down next year. Good or bad, rates are going down. We don't want the economy to look too good so they can start cutting the rates on it, but also the same flip side. If rates are going down really fast, that's probably not a good thing. It's a bad thing. Overall, from my perspectives for this upcoming year, I would expect borrowing to get cheaper, right? Rates are coming down. I'm expecting some financing costs to come down. Unfortunately, the days of 4 or 5% money market and CDs, that's probably going to be going away too. Next year, it might be cheaper on the borrowing side of it, but the risk-free 4% that we're seeing right now is probably going to go away too. So if I got money in high yield interest, I'm going to keep an eye on it. I'm going to make sure that it's still good, especially if I'm keeping some money, kind of interest rate arbitrage, borrowing some money, but I'm still getting good rates on the deposit. I will still keep on doing that. And right now, the current interest rate market still kind of dictates that. But I would say probably end of first quarter, second quarter next year, if those rates do fall, I'm probably going to be in a position where, money market might not be at 4%, might be at 2%. Still better than the 0.2 it was a couple of years ago. We'll probably see that start to normalize. Anything to panic about? Anything to follow too closely? Probably not. If you're in expansion mode, if you're in growth mode, be careful about locking in a rate because, if we have sliding interest rates, you could go from a good rate to a pretty non-competitive rate pretty quickly. I would imagine most people will be doing floating rates or variable rates anytime that you have this much kind of volatility expected in the near future. Lastly, on here, we have employee retention tax credit. I've told you, I'm not going to talk about it. I don't want to talk about it. I have to talk about it, right? It's my job. So what is going on with the employee retention tax credit? Currently, as of right now, the IRS is sitting on what they think, what they claim, what they're telling us is like $100 billion worth of unprocessed employee retention tax credit claims. They actually have no idea how much is out there. We have no idea because a lot of this is just physical paper payroll tax returns that were filed in there. Like I've been telling people, I didn't think that the IRS would still be sending out money as of today. I don't think that the IRS did either. But as of right now, the program is alive, meaning if you have an ERTC application in there, they are planning to process it. How long will that take is the better question here. What we've been seeing is about the first week of every single month, people are getting checks, but just trickling in. As of right now, they claim that they're going to process this until they're all processed, but by the calculations, I mean, this is going to take 5 or 10 years by the pace that they're going. There seems to be really no rhyme or reason to it. I have some people that have gotten this quickly. I have some people that have gotten all of it. I have some people that have gotten some of it. For the first time here in December, I've started to get some people get notices. Hey, Mr. and Mrs. Taxpayer, we noticed that you filed an ERTC claim for $60,000. We went back and we made adjustments and we think that you should have only got $12,000. That's a real one that I've got. It's the first one that I've ever received. Good and bad news. Bad news is they're reducing what my client should get. My client should have got 60 grand, not 12 grand. The good news is they're processing this stuff. From what I've seen, like I said, they're sending this out the first week. There seems to be no rhyme or reason to it. Keep an eye on the mail. They haven't started to do this with the employee retention tax credit a ton. Like I said, they've started to do it some. The IRS cannot go back and say, hey, we're not going to process any more employee retention tax credit claims. That's not how the tax code works. They can't say we don't feel like doing this. But what they've done in other cases that where there's stuff that they owe you guys money is they're not allowed to not send it to you, but they will make your life miserable. What I think that they're going to start doing is they're going to start trying to wipe out this backlog. They're going to start doing this by doing stuff like, hey, Mr. and Mrs. Taxpayer, we would like you to send backup documentation for this ERTC calculation. If you don't respond in 90 days, we're going to assume that you don't want this and your case will be closed. They're going to start to do stuff like this. I've seen it in credits in the past. It's a way for them to kind of put a bookmark in this. Right now, we have done everything that we need to do. It's sitting in the IRS's lap. And any given point, the IRS could essentially put it back in our lap, ask for something, ask for clarification, ask for them to, resend some sort of backup documentation. Now it puts it back in our lap, right? And if it's on our lap, the IRS can set a time limit on this. So if you're sitting here right now saying, Hunt, I've gotten 5 out of my 6 checks. I've gotten 1 out of my 6 checks. I've gotten 0 out of my 6 checks. What are you saying? I'm in your shoes. I'm expecting nothing and hoping for the best. And that's realistically, I think that the only thing that you can do. The perspective is right now that you should expect to get it, but I wouldn't expect it anytime soon. There's nothing that showed me that they have the ability or the interest in settling up the majority of these anytime soon. So I imagine that they'll keep on trickling this stuff out. We are going to have a new president in January. Trump will be in office in January. Is this on the legislation? Is this, I'm hearing talks of, getting settled up? No, it's not. And it's really not a popular one because it's $100 billion of what they say, but they really have no idea. There's 2 big aspects of this which are fighting against us. One, we have to have the IRS do more work than they normally have to do. That's never going to be good. And number 2, we have to have the government spend more money than they want to spend. So we have 2 forces. The people of the government and the checkbook of the government are both fighting against us. In most other situations, us as the taxpaying Americans, we can win for a little bit, but usually that equation flips back. So hold your breath. It should be coming. Pray to whatever you pray to. Get a rabbit's foot. Luck is on your side. You should get this. There's no sort of signs pointing that you shouldn't. But fun fact, when I was doing some research on this, when I just looked out like any news update about ERTC payments, a lot of the same companies that you guys paid to get your ERTC are now representing their clients, and they are going to fight with the government to try and get the ERTC money back. So the advertisements actually say ERTC money frozen. Call us and we'll collect the money. Are these services working? Can you call the government and quote unquote get it unfrozen? From what I've experienced in the past, from personal experience, you can't call the IRS. They're going to tell you that they have no information for you. What are these companies doing? I don't know. If you've used one of these companies, if you've had luck getting your money unfrozen, shoot me an email. Podcast@Parmelis would love to hear about it. From what I've seen in my experience on this, they are selling hopes and dreams, and there's no shortcut to this. Please share with friends. Obviously, this is a podcast directed towards shop owners, but all of the stuff we talked about this week is for people other than shop owners as well. If you have any comments, questions, ideas for a future episode, shoot me an email at podcast@parmelis.com. So I just want to say thanks again for joining on the Aftermarket Radio Network. You can find all shows on the aftermarketradionetwork.com and on your favorite podcast listening app. So thanks again for joining on Business by the Numbers. Stay safe, and I'll talk to you all next week.